Good morning, my fellow traders. Hope you all having an awesome day and hope you all enjoying your weekend. It was a crazy week in regards with fundamentals, lots of things happening in the world. But that is why I stayed back in my trading game. I've only picked up few trades that shows me high probability setups. Now first I want to inform you that if you want to skip the first part of the video, you can always skip it to the timestamp, because in the second part, we're going to do analysis of nat gas, gold, silver, and crude oil. And if you're someone who really serious about trading, who want to learn something from my experience and get your trading psychology up to the mark, then I promise you, you're going to get tons of knowledge in the first part of the video. Because in the first part, I'll be mentioning what happened throughout the week, what I avoided, what I've traded, the zones sent to the members, the trade I've sent to the members, the losers, the winners, and everything. I'm going to discuss that. Some trades mentioned in the live sessions, members only live session, I'm going to discuss that as well. So I'm going to start with this quote that motivation does not last forever, but discipline does. For example, today you are really motivated to make money from the markets. Let's say you have 5 to 6 winning trades in a row. In that week, you have that motivation that you can conquer the markets. But what next week you have 7 to 8 losing trades in the row. You'll be depressed. You don't want to trade anymore, and your belief in trading will go down in the drain, and you will feel that trading is not something that can become your full-time income. You'll get that thought, and on that thought, you will start gambling, and whatever left with you, you will gamble that and you will lose that all. But the difference in discipline is you have a winning streak for whole 1 week, then you have a losing streak for the next week. You are calm, you are disciplined, that if you can able to capture the winning streak at first, then it is not impossible in the market to capture that winning streak again. So you stay disciplined, you manage your risk, you didn't lose anything which you have made in the first winning streak, you still have some money left, and you come back again stronger. You sit back, you take a deep breath, you analyze the market, and instead of going aggressive, you go conservative. You don't take aggressive trades, you want to get an extra confirmation out of the market. Or you stay back and relax for 1 week, get your mind on track, and then come back in the markets. So that is the difference between motivation and discipline. Stay disciplined, because motivation does not last for long, especially in the market. You get excited for 1 week, next week with a losing streak, your excitement can go down in the drain. But with discipline, doesn't matter you have a losing streak or a winning streak. Even if you have a winning streak, you don't get excited, you don't get happy, because you're looking at the end results at the end of the year. In the last 2 years, I've been uploading the results with exact proofs. You can see that I had lots of losing streaks there, but at the end, every time I come out profitable. And this year is also profitable so far. The results I'm going to show you in a couple of months. Now, first, I want to start with my losing trade that was also sent to my members. Now, you heard me talking about pullback entries a lot. And what do you see here? First, we have a nice trending market, right? The market starts to push up, lots of green candles, and then we had lots of red candles. And after that, the price forms bullish engulfing candle. Now, for me, all my rules are met. We have a nice trending market and we have a bullish confirmation. For me, I've entered my trade right here, and that unfortunately hit my stop loss. Now, that was my first trade of the week. Am I depressed at that time? No, I was not, because I knew that if that happens, it is my tested strategy, and I'm sure that out of 10 times, at least I will be profitable 6 times. And even if 5 times, if I'm trading with a better reward to risk ratio, even if I'm right 5 times with a good reward to risk ratio, I'm still profitable. So that was a losing trade for me. And afterwards, I want to show you this trade, exact same entry, break over 50 MA with a pullback engulfer, entered bit below, and that nicely hit my take profit. Now, this was not sent as an alert. This was my personal trade, but the alert is for you to learn to look at the same condition. That is why I say it is not something, it is not a signal group. From the signals, you will never learn. You will only gamble. But if you learn these patterns, which we had here on USD JPY, and then we had the same pattern on NZD CAD, then you learn that. And you have entered this trade, bullish cross above 50 MA engulfer. And similar goes with AUD CAD, AUD CHF, nice trending market, pullback, engulfing candle. And that nicely hit my both targets, smaller targets and bigger targets as So if I was scared in my first losing trade, would I be able to take these 2 trades? No, because if you are scared, then you are doubting your strategies. And similar pattern found on palladium, commodity as well, right here. Pullback in golfer, that is also pushing up. I've not taken this trade, but I'm showing you this pattern. Similar pattern found on crypto market, right here in golfer, nice uptrend. In golfer, enough to hit your profits. Even if you look at Bitcoin, nicely trending up. In golfer, nicely pushed up. So from my YouTube videos, you can learn these basics. But if you are my student, you know the full rules of the entry. Now this entry is a combination of 6 rules. Once 6 rules are met, I take my trades. This might be valid and the same entry might not be valid because I look at very small details. But you see, that is a trend following strategy and how nicely that has been playing out. So these are my 3 winning trades after losing trade of USD/JPY. And then in the live session, I want to show you the breakout strategy, which I often talk about in my live session, which is right here. Now, previously in my previous weekend's video, we have taken this trade, right? This breakout strategy. And then we had one more pattern that formed right here. That is another breakout strategy, break of triangle pattern. That is simple and easy, right? It's either going to hit your stop loss or take profit. If stop loss happen, that is fine. You're going to take another trade. And that is what trading is all about, winners and losers. But the main thing is how much you can control your emotions. When the money is involved, it is not possible to control your emotions. But if a proportion of money is involved, out of 10,000, let's say you have a $10,000 of balance, and if only 1% is at risk, for example, out of 10,000, your trade is about $100 loss or $100 take profit, it will not hurt you. Even if you have 9 losing trades in a row, £900 or $900 will be lost, but afterwards you have 7 to 8 winning trades. With a better reward to risk ratio, it will not just recover your loss, it will give you profits as well if you are trading or managing your trades. Now, this is something I'm not just telling you. It is something that was mentioned to my members in the live session because we get prepared for these moves before it happens. So let's see the clip when I've mentioned this entry. Euro GBP 1 and 2. Not the strongest pattern, a minor I would say, not the strongest one. Still valid. Some range and breakout. Remember the last week we have set up some trades. So exactly same condition we are getting here for Euro GBP. So now for your trades, if we broke above with a solid candle, that is your entry. Stop loss can be below this pattern and take profit 1 to 1. And opposite for bearish. If we broke below, that is opposite. So keep an eye on the breakout of this pair. Nice one. So we were prepared for a breakout above or below. Similar, we had a breakout above or below right here. So when we had a lot of range and rejection out of these patterns, it goes either side, above or below. In this case, it broke in below and that nicely pushed down. Now, if you make your rules in your trading and you stick with those rules, that you are not going to take any trades unless your rules are met, then you can make it in the trading world. It can become a full-time business. Some weeks can be good, some weeks can be bad, but at least you know that you have followed your rules. You're not doing anything wrong. And I'm showing you these opportunities every single week. I'm showing you these winning trades as well every single week, that this is a potential you can get from the market. If you follow your rules, if you have a set in stone rules, then you can take your trades. But rather than forcing yourself in a trade, you just want to be in the trade, you just want to be in the thrill. That is something we call gamble and excitement and fake motivation, not a discipline. So talking about discipline, let me mention one more trade, a zone that was sent to the members. With that, I mentioned that with my students in the Discord group before the entry has happened. Now, that was a commodity, right? I don't like to trade this one, but that was a very good condition we got. Now, entering aggressively, I don't prefer with these commodities, these soft commodities. But when there is a double bottom, and that is very clear with what? With green bullish candle, then it is a good opportunity. Now, this was something sent to my members. This report was sent to the members that it is a major level. Now, it is not just a major level right here on a daily. If you look here, lots of rejection previously bounced up from this zone massively. If you look here, and if you look here on a weekly time frame, that is a very strong level. So looking at these confluences, I was comfortable to enter. And with that, we had double bottom as well. If you look here, we had double bottom on a daily and we have double bottom on 4 hour, but I was looking for my entries on 4 hour. But that was clearly mentioned in my live session that was sent to my members. As you can see, the report in front of you to look for an opportunity. So that is what we call discipline. I waited till the price come down to the zone, forms a condition. When it forms a condition, only then we're going to take over trades. I did not enter just without any confirmation. It hit my zone, it started to bounce up. For me, there is no entry. Yes, these pin bars happened. That is something very aggressive, and I don't prefer that in soft commodities. Instead, I want to enter my trade with less aggressive entry double bottom. It is not something I'm saying you. It is something I've mentioned to my students in the live session as well to the members. And let me show you the clip from that video where I've said that I'll be entering if the price forms a double bottom pattern. There is no condition to buy yet for me. Yes, there is a pin bar, a weak entry. I will be more interested to go for the chart patterns like double bottoms. Perfect. So as you can see, we had a double bottom pattern formed clearly, and I've said that I'll be entering with double bottom, and we were already prepared to take over entries from these zones from the report I sent to the members. With that, in my Discord group, that is just for my premium members who are my MMT full course students, not for the members. For the members, I'll be opening one more group soon. Nicely pushed up. That is what we call disciplined, right? And with that move, that nicely hit my 1-to-1 target so far. In this part of the video, which is the second part, I'm going to talk about net gas price action, mainly about price action. How you can cut your profits when there is a time to cut your profits. Because most of you, I get emails, I get messages that they are stuck in the trade. This lesson is for you. That when you take your trades, you don't need to hang on with your trades. And the price action gives you signals to come out. So I'm going to talk about nat gas. I know that is your favorite commodity. That is why I'm going to give you those examples from natural gas. Now, what does price action says? Price action means buyers and sellers, they are giving you signals that if we are going to push up or if we are going to push down or if we're going to keep on pushing up in a trend without a break of the previous lows, mean we are still intact with an uptrend. Same goes with bearish but opposite. Now, one trade alert I've sent to the members, that was not actually a trade alert, that was just an example which was right here. This was sent to the members, the price was already here, that is why I've said that was not actually a valid trade because it was already pushed down. But this entry was already mentioned in my live session when the condition didn't even formed. Now, I want to show you the similarity and the power of learning from these alerts. Now, right here, we had a price hit the zone. As you can see, the previous level of structure forms first top, rejected from second top with bearish candle. And with that, we have a divergence right here, weakening in momentum, clear weakening in momentum. And then we had a push up due to a Canada interest rate decision happened that pushed the move up temporarily. Now, you see the similar pattern, the price action right here. It tells you that we have a rejection twice with bearish candle, with divergence. Now it is a time to sell. Now I want to come back here on natural gas. Similar condition, first top, second top, divergence, and that shows a bearish pressure and weakening in momentum. Now, does it mean that I'm going to hang on with this trade for long? There is no reason for that. Our goal is to grab your profits and come out. We have taken the trade right here, grabbed the profits, then we are waiting for the pullback, a double top pattern to form, grab the profits, and for commodities, I'm comfortable to go. First target, 1 ATR, second target, more than that. In this case, if you look here, an ATR of this candle is 6.8 and price push down more than that. If you look here, that is more than 1-to-1. That is, I would say, 1.4 to 1 reward to risk ratio with this trade. What else do you need? Why are you not coming out of this trade and why are you still bearish? Now, talking about price action, I want to take you back. Now, what market do you see here? That is a bullish market, right? It is a trending market. Now, when the price bounce up from the support, two things can happen. Number one, when the market is trending lower, it can either bounce back up, right? Or it can fall and continue to push down in a trend and carry on with the downtrend. So two things can happen. Either the market reacts massively from the zone, that is something we call change of trend. Second thing, it bounces up and continue to push down in a downtrend. So in this case, what happens? In this case, market was trending down, push down and forms condition here. And instead of continue to push down in a trend, it decided to continue to push up and change its trend. And how do we know that market is going to change its trend? Signals. the signals form. With signals, you can tell that price action is telling us that we are going to change the trend. Now, when the market pushed down, making lower lows, low highs, lower lows. Now, in this case, if I want to be bearish for the market, I want to see the market break this low. Every time the market break this low right here, it is a signal that market is going to push down, right? From this low is broken, means we are broken below this low and we are going to push down. Now this low is broken, we are still going to pull back and push down. Now for the trend continuation, we want to see a break below this low for the further continuation. Now in this case, it never broke. Instead, the market break above the previous highs, which is right here, lower highs. That signals that we are going to push up. With that, it forms a kind of head and shoulder bullish pattern as well. Now the mistake we do, when the market starts its trend, we don't come out of the trade. When the market is trending either downwards or upwards, our goal is to grab the profits in an uptrend. When the market is trending, we are not going to fight with the trend. Instead, we're going to take an advantage of these pullbacks, right? Now when the market started to bounce up from here, we pushed up, we hit the level of minor resistance, we sold here, we had this pullback, we exit right here because we have a signal of double bottom, right? It tells us that now it is a time to come out. If we don't come out, market is going to eat all your profits. So we capture this move, we exit, and the market carry on to push up in a trend. Now market hit the next level of minor resistance, we capture this move, right? It is an uptrend, we are out of this trade, and now we are observing the market if it's gonna break above these highs or it's gonna break below these lows. If that happens, we are only gonna go short. In this case, the market broke above these highs, means we are still bullish and we are still going to take sell trades, the chunk of sell trades from this level of minor resistance. Chunk of trade has been taken, and then we're going to observe if the market is going to break above these highs or if it's going to break below the previous lows, and then we're going to decide accordingly. So we get a chunk of the profits and the market decide to break above these highs. And in that process, the high time frame is also telling us that now I'm bullish. Go back on weekly. Now, right here, what is the price action telling you? Price action is telling you on weekly, it has already given you signal that I am now bullish. I have a weekly bullish momentum and it is likely going to hit this level. And the uptrend has been started. And from these levels, we can see some sort of pullback, an opportunity to grab some profits, a cool down period, and then it's likely going to push up because bullish candle on weekly is the strongest candle, and that is the start of a new trend. And that has happened. We had a breather, we had a push back up, we had another bullish candle on a weekly, and then it pushes back up. We had a breather, and what do you see here? And that is something we have on a current date today. And from here we are pushing back up, which I want to cover very shortly. And that is something I want to explain you guys from the recent example, because I got lots of comments. Omar, you said we're going to be falling from here. No, we are in an uptrend. The market has given us this signal already. First, from the daily candle right here, which was clearly mentioned in my last few videos, and then from this weekly candle that has been mentioning from so many videos that expect a pullback, and these pullbacks will be bigger on a smaller time frame, and that is an opportunity we need to grab. And we have taken those opportunities. In an uptrend, we had this bearish candle, we had this pullback, we had double top, we grabbed this trade as well. And then what happens? Did the market break below these lows? No, it did not. Instead, it break above these highs, signals us that we are going to push up. So high time frame is telling us we are bullish. Smaller time frame is telling us, yes, there is a time to grab your profits from the smaller time frame, from your short trade in an uptrend, and then it carry on to push up in a trend. So let me show you the clip from a last few videos so that it will become so clear to you that there is no confusions left, that I've been mentioning these conditions again and again, and that is something we're going to do in future as well. I'm going to go through weekly time frame as well, because we are getting some very good conditions on weekly. That is something for the long term. But talking about short term entries now, since the price is now in the overbought situation, with that, the price has formed a swing high bearish candle. Now that doesn't mean I'm going to go bearish for natural gas. It is just a pullback. I'm expecting at least one ATR from here out of this platform, not a bigger target, just good for the scalp. All the way from here, the ATR is 6. And if you look here, all the way from here, from where the candle opens, right here, 60 or 6 looks something like this. For the bigger target, 2 ATR, you can go 12 like this. So that's totally up to you how you want to manage this trade. I'm more interested after the pullback. If the price forms engulfer, I am gonna go long. So in this trending market, I'm more interested to take my buy trades. But with these pullbacks, since we have this bearish condition, we can see a possible retracement, and after that retracement is done, it is a likely chance the price forms another bullish engulfing pattern. You can also use Fibonacci levels like this, and we might see a pullback to 50% retracement. Right from here, we might see another push up. Aggressive entry can be target 1786 retracement, target 2, and target 3 1.618 retracement. So that is something I'm just looking here on capital.com. If the price pushes up and rejects from this rejection zone right here, and in that process, price rejects from here with a double top pattern. If that happens, we will have a valid double top with engulfing candle. That will be a strongest entry if the condition forms here. Make sure you look for double top patterns as well. If we have a double top right here, we might see another push back down. So if we have these conditions, in that case, we are looking at the price to go towards the downside. So keep an eye. Remember, there is still a room right here for the price to move up. And this bullish candle signals that we have a good room for the price to push up to these levels, which I've already mentioned in my last video. So that is why very important to look for a pullback, like I mentioned, on 4 hour, a condition here. Now the small pullback on a weekly, like right here, look at this line, small pullback on a weekly. And now look here on 4 hour. This is a massive pullback on 4 hour. That is what I want to explain you. Even if you want to enter sell trade, that is just a scalp on a weekly time frame. And then the price might push back up and continue to push up in a trend towards the upside till it gets to the next level of resistance right here, and then the major resistance right up there. Perfect. Listen to me very carefully. Now, if you have seen my last video, I've also plotted Fibonacci tool for a long entry. For long-term traders, means we are buying at 50%, right? For the aggressive traders, stop loss is below the pattern. So remember, stop loss was never hit. Long-term, we wanted to buy, and in this pullback, we got an opportunity to grab this move, but not randomly, where we got an entry condition. So why not just grab this move as well? So for aggressive trader, it is a winner as well. From here till here, still pushing up to 1.618 retracement. And for scalpers, we had this move, bearish engulfer. We got this move as well, right? So it is a win-win situation for both of them. But the common thing is we got an entry condition for bearish trade, and for bullish trades, we got an entry condition that is for the long-term traders. So that is the beauty of conditions. So you see multiple times, multiple days, I've been giving you signals that market is still bullish long term, but we're going to grab the profits from it if there is an entry condition. And it is a minor zone from where we can expect some reaction. With that, I've sent report to the members that we are looking at this level. That is why I've not sent this level this week, because I was 90% sure that this level will be broken. That is why I've sent this level, as you can see on the screens, for all 4 platforms. Talking about capital.com, talking about MCX and NEMIX as well. I've sent the upper level, not these levels. So that is something we need to learn from the market. Price action tells you everything. Higher time frame, look for the confirmation. Lower time frame, look for your scalps. Look at the lower levels. Look for the small levels from where you can go for the little scalp. Come out and look for the next opportunity. Grab your better reward to risk ratios. That is all we need to make from the market, making money from there, not just seeing and watching money and numbers going up and down, and then market eats everything because you have not taken your profits. Not taking your profits is as risky as not placing your stop loss. I mentioned that multiple times. Now, what to expect from the market from here? By the way, this weekend's video, I forgot to add the trades that happened with my bot, but the one we have here on natural gas I want to show you, that was also shown in my last video. As you can see, we had a buy signal out of natural gas from the bot, and it is pushing down. Now, I want to show you one example. Now, if you look here on a 4-hour time frame, this data is from 2018. That can be wrong. We are not going to go back so long. If I want to calculate my profitability, I'm going to go back at least 1 to 2 years. So just ignore that, but I just want to show you an example of this data. Now you see the profitable trades was only 49%. And we are still profitable, right? We are still in plus. Why is that? Because it is better reward to risk ratio. In last so many years, we only had 49% of winning trades, not even above 50%. We are still profitable because it depends on a reward to risk ratio. It depends that you are coming out of the trades, not getting panic as well. So that is an example I want to show you as well before we move ahead. So let's close this bot and let's start what to expect next. Now, first you can mark these zones on your charts accordingly. That was sent to the members and these zones are still applicable, right? As you can see these zones on your screens, mark that on your charts on MCX, on NEMEX, Ovanda and Capital.com. Now let's discuss the entries on 4 hour. As I take my entries on 4 hour, all these entries happened on 4 hour. That nicely hit our take profits, and now price broken above these highs means we are now pushing up. So there are two things we can look for. Number one, on a daily we are we are above 50 EMA, and if you look here on NEMEX we are above 50 EMA. If you look here on Ovanda we are above 50 EMA, and if you look here on MCX we are above 50 EMA. So for the MCX audience, have these zones ready on your chart. So on all the platforms we are above 50 EMA on a higher time frame, means we are bullish. We have a nice EMA gap, mean we have a strong bullish momentum. Now the price action can do something like this: push up, hit EMA, start to push up, reject from 20 EMA, then double top, confirmation that we are going to push up with the break of this candle. Now pull back and come to 20 EMA, this blue line is 20 EMA, or it can come down to 50 EMA and start to push up in a trend again. Now listen to me very carefully. There are two ways of entering this trade. Number one is my favorite way of entering, which is a pullback to 20, or better is to pull back to 50 EMA with strong bullish engulfing candle. If we have a pullback to 50 EMA, that will be even a better and strongest entry, since we have a nice pullback, and with bullish confirmation, which is a bullish engulfer above 50 EMA, I am gonna go long. Plus this zone has been broken. The previous structure that was broken recently, as you can see, there was a previous level of structure on a weekly time frame that was just broken. With a retest, we can see a possible push back up. And if you want to mark these on a chart, it's 3.555 goes to 3.750 on Capital.com. On Ovanda, it is 3.237 goes up to 3.344. On NEMEX, it is not valid yet, so ignore that. On MCX, the zone that was broken is 289, that goes to 303.2. So have your upper zone, which I've just shown you the screenshot, and the lower zone as well. So coming back here on entries on 4 hour. So I've already mentioned one entry, which is my pullback entry bullish in this trending market. I love that strategy, pull back and keep on riding along with the trend. Number two, we are simply going to plot Fibonacci tool, something like this. Now we can use the upper level or the lower level. Lower level can be less aggressive, since we can see some good pullback to 50% from here, buy limit order, and then take profit can be 1.618 retracement for aggressive entry. Now, if you use the upper level, it can be aggressive since we have small room for the pullback. In that case, 50% can be right here. It can still go all the way down, from where it can start to bounce up. But again, like I said, it's going to be aggressive, 50% here. In that case, buy limit order and take profit can be 1.618 retracement. So that is something. Less aggressive Fibonacci entry, aggressive Fibonacci entry, and we have a pullback entry bullish as well. Again, if you have a pullback, we have a retest of the previous support that was broken. With that, if you have a bullish engulfer, that is the strongest entry condition. And now I'm expecting, in general, a price to push up to these levels, from where I'm expecting a nice fall back down. So that is very simple. All you need is patience. Stay disciplined, be patient, don't rush. If I said it is bullish, that doesn't mean you just start buying blindly. Yes, it is a likely chance the price is going to push up, but what if there is a pullback? Would you be able to survive this pullback? Would you be able to survive this stress? You don't want to be stressful. Instead, wait for the confirmation. I've already mentioned aggressive entries as well. If you're not someone who's patient enough, you can always go for the aggressive entries. Again, guys, take your trades on your own risk. It is just my opinion. I'm just sharing that with you. Nothing should be taken as any sort of trading advice. So simply look for these conditions. I don't want to go through on all the platforms, similar conditions on all the platforms except NEMEX. On NEMEX, just look for pullback entry above 50 EMA, bullish engulfer. That is all we are looking at till the next level of major minor resistance, which is right up there. Now it is not a major resistance. Major resistance is right up there around $4 to $5, but we can expect reaction again in an uptrend. I've just given you a very good example of the price action. In an uptrend, we're going to grab the profits and price can likely to push up to these levels. We have a weekly bullish candle. That is why I'm saying it is a level from where I'm just expecting reaction. It can reverse as well, but for that we have signals which I'm going to keep you guys informed. So here on NEMEX, we are looking for pullback entry bullish. If you're looking here on Owanda, exactly the same. Previous anchor that was broken. I've already set the lower level. If you look here, I plot my Fibonacci tool all the way from the high right here to the low. 50% has been triggered, but for this platform, I want to keep it like this. And here 50% order has been triggered as well. So we might see a push up from here to 1.618 retracement for aggressive traders. Our MCX audience, set your Fibonacci tools like this. 50% is right here. Take profit 1.618 retracement. For less aggressive entry in an aggressive way, you need to have your Fibonacci tool to the lower level. In that case, 50% comes right here. 1.618 retracement is right here. Otherwise, pullback entry bullish is the best way to enter with a confirmation. So let's see how this goes. Keep an eye on these conditions. So let's carry on with gold. Now, in the live session yesterday, which was my public live session, I've clearly mentioned that I won't be buying gold. I'll be only buying gold once the price comes down to this level. Right here, 2927 goes to 2981 from the zones. Now, in general, we are bullish in an uptrend and there is a very likely chance that price can come down to these lows, which is 3164 that goes up to 3201. From where you can see another reaction. The reason is the 50 EMA will move up on a daily and 50 EMA can push the price up again. And we might see a triple top here before the price pushes back down. So we still have a room for buy if the price come down here till here. And once we have broken above these highs, only then we have a confirmation that price want to push up in a trend. I've already explained you the price action. If not, then we can see a market to move within this zone to here. But make sure we are aligned with the 50 EMA because 50 EMA will move with the price as well. So this is a minor anchor from where we can see another bounce up. Until then, I'm not buying. Until then, we can see a possible fall to this level from where we can see another reaction. So be very careful. I'm not buying gold at this point as long as we are not here, very weak level, or we are not broken above these highs, or at least these highs. So expect a bearish move short term till here and 50 EMA on a daily time frame. Here on silver, exactly the same. We are just ranging between these two lines. As long as we are not broken above this range, I'm not taking any trades. Broken below these lows will confirm the bearish moves. Broken above these highs will confirm the bullish move till the next level of major resistance from where we can see another fall back down. If the price pushes up to this level, 34.42 goes up to 35. In that case, I'll be selling silver from this level. So let's see and let's wait for the range to break above this high or below this low. Finally, we have crude oil. Nicely pushed up and we are now above this anchor support. So crude oil is now bullish and we are getting across. We got across. I'm only looking for a pullback and in golfer, then only buying crude oil. That is all I'm looking at to buy crude oil. Till when? Till the price gets to 64.42 goes up to 65.82 from where I'll be selling crude oil. So that is all we are looking at. I'm going to remove these zones to make my charts more clear and keep looking for my buy entry with my pullback entry bullish. So that is all we're looking at, only buying trades for crude oil. So that is it for today's video. Hope you got a value out of my today's video. If yes, do not forget to hit the like button for me. It really helps me in the YouTube algorithm and I do all the hard work for you guys. Mark these zones, give you the conditions, and if you hit the like button for me, it really makes my day. Hope you trade green. I see you guys in the next video. Have an awesome weekend. Take care.